his loved ones and everyone that he left behind. Further on the economic scene, inflation continues to rise up to 31.7% as of February 2024, while the CBN has maintained its commitment to combat it, successively increasing MPR to the current 24.75% at the last MPC. On a more positive note, the exchange rate seems to be moderating downward, even as CBN resumes sale of FX to BDCs for eligible invisible transactions, although limited to $10,000 per BDC. These and so many more things are going on, and as usual, our speaker, Mr. Bismark Rewane, is on hand to dissect it all for us. And so, without much ado, let me introduce Bismark Rewane, who is the Managing Director and Chief Executive of Financial Derivatives Company Limited, that offers valuable research and data to provide insight for investment decisions in sub-Saharan Africa and especially in Nigeria. Bismark has more than 30 years experience as an economist, banker, and financial analyst. He's a chartered member of the Institute of Bankers of England and Wales and is a fellow of the Nigerian Institute of Bankers. Welcome, Bismark. It's always a pleasure to have you on board. Thank you for coming again. Our host is Ade Buraimo, the Group Managing Director of Alpha Morgan Group. Ade is a banker with over 25 years of commercial and investment banking experience. He was the Managing Director of GT Bank Limited, Sierra Leone in 2010. And prior to that, he was the Managing Director of GT Homes, the then mortgage banking subsidiary of GT Bank. Ade is a fellow of the Chartered Institute of Bankers, an associate of the Chartered Institute of Securities and Investments UK, an associate of the Chartered Institute of Stockbrokers, and a non-executive member of the Fund Managers Association of Nigeria, where he serves as the chairman, Ethics, Standards, and Regulations. Ade, you're welcome. Last but not least, we have George Imade. George is the Managing Director of Alpha Morgan Capital Advisory Partners, our investment banking subsidiary. Welcome, George. Our session today will follow the usual pattern. Bismark will present and review the Nigerian economy, and we will take questions after that. Please, participants, type your questions in the Q&A box, as many as we can take, we will answer after Bismark's presentation. And then after the Q&A session, George will give the closing remarks, and then we will close. At this point, I'll hand you over to our host, Ade Buraimo. Welcome you all once again, and thank you. Ade?
It's just called me.
Thank you so much. Thank you. Well done. My name is Ade Buraimo. I happen to be the Group Managing Director of Alpha Morgan. Alpha Morgan, we have suddenly become too big to fail, and we have been rated by a leading rating agency, Augusto, BBB+, and recently Data Pro rated us with A+. The Financial Times and Statistics, we are one of the fastest growing companies in Africa for about 2 or 3 years now. 40 in Nigeria and 17 in Africa. I want to thank the Almighty God, how far He has helped us, and want to thank every one of you that have been patronizing us and supporting our business, including the speaker of today, Mr. Bismark Rewane. I'd like to welcome all of you. I say good morning, good afternoon, good evening, wherever you are joining all over the world. This is the 12th edition of the webinar, Wealth and Economic Review with Bismark Rewane. It's been very enlightening, it's been very interesting, and we'll continue to fly the flag. The entire economic, monetary, and fiscal space is taking a new shape. We're happy with the direction of the dollar, but we are not too comfortable with the direction of the interest rate. But this is a pill, a bitter pill all of us, we have to swallow to be alive as a nation and for businesses to strive. We can feel the gradual return of the portfolio investors, foreign investors. We hope they stay longer. We can also feel the reduction of the diesel price. I will not do the job of our speaker because we're all excited and waiting to listen to him. I want to thank him, Mr. Bismark Rewane, for always finding time to attend to us in spite of his very tight schedule. I'm sure this is, he just finished a national discussion on Channels Television and is here again to speak to us. I want to say thank you so much, sir. We'll continue to be very proud of you. I'm going to defer to you for issues publicly and personally. Thank you very much. We are very grateful. I will now allow him to take the stage and do what he loves doing. Once again, I want to thank every one of you for believing in us and supporting and joining this program regularly. I thank you all for coming. Okay, thank you so much, sir.
Good morning, Ade.
Oh, it's ready, sir. Yeah.
And welcome back from your travels.
Thank you.
Now, today, these are interesting times. Like in China, we say that we live in interesting times. In China, also, we say when we go to war, we dig two graves, one for our enemy and one for ourselves. So in fighting the economic battle, we should realize that when night becomes day or when day becomes night, everybody's house is covered. So we look at it very closely, and strangely enough, on the 8th of April, we are going to have an eclipse of the sun. This thing happens very infrequently, and there are also signs of times to come. This is the month of March, and Shakespeare said in Julius Caesar, that beware the Ides of March, which means that it was the time when Surina told Caesar that beware the Ides of March, because March can mean different things to different people. Now, today we're going to talk about some recent developments and also some key global trends. Let me talk about some recent developments which we cannot ignore as investors. Everybody on this call is looking at, one, how to stop losing money, two, how to make money, and how to keep the money you've made, right? So I repeat it again that investors look for direction in the short term and look for value in the long term. But what is your definition of the short term? In Nigeria, short term is last week. Present term is yesterday, and the long term is today. So, but Keynes told us that in the long run, we're all 6 feet under the ground. So we hear that NNPC has been told to close all their accounts with deposit money banks. NNPC is the largest depository, both in dollar terms and naira terms. But again, you know, we announce rules, but obeying the rules in fact, are more difficult. And in Nigeria, we have the tendency to say the exception becomes the maximum. So if I just look up, I was something that just cast your mind back to this time last year. The naira was trading at about 700. So between this time last year and now, when I checked, there has been no earthquake in Nigeria. There has been no floods taking over the whole of Nigeria. There's been no COVID attack spread. There was no pandemic, nothing. What will make the currency go from 700 to 1500, from 1500 to 1900 to 2000? So let's ask ourselves, and everything was done out of panic. So, and then we begin to go back to where we should have been, and we are clapping for ourselves. The truth is that if you score a own goal and then you equalize, and then you start clapping for yourself, you know, you should have been 1-0 ahead if you didn't score the own goal. So I want us to see that context. So when we're now saying 1300, the naira has gained 45% in 2 weeks. Should it have lost 45% in the first place? And why should it have lost 45%? So there are structural misalignment issues transient in alignment, and then there's panic and speculation, and there's all sorts of manipulation. So if you knock out all of these things, you begin to see Naira begins to approach fair value. Fair value can appreciate more when you increase supply, and we'll come and talk about that. But luckily, because of the monetary policy tightening, and Rewane talked about it, monetary policy tightening is a recipe to making your currency appreciate in any case. So you do not have money supply growing at over 70% to 90 something trillion naira in a year, and do not expect it to have an inflation. Right? In 1987, 86, when Nigeria embarked on the structural adjustment program, the central bank made it clear that everybody who had old commitments should fill their Form M, pay their naira, and they guaranteed them money at the old rate. So that actually removed all the speculative activity, and the currency stabilized at that level. So now we're going back to our forward commitments, our arrears, and also money policy tightening is one, which is we move the policy rate, we move the treasury bill rates, but we still have the printing of money, which is a fiscal issue. Runaway inflation. Inflation is a persistent, defined as a persistent rise in prices, right? And it measures the change in prices, not the actual nominal prices. So it's possible that prices will be declining in some areas, but their weight in the basket may not be that much. So first and foremost, let's clarify one thing, that inflation measures the difference in the price of this time with the price before. And if it's declining, it does not necessarily mean that prices of commodities in the market are declining. But it is the measure which they use for inflation targeting to determine the level of interest. And you know, and everybody in this room knows, everybody in this chat knows, that if interest rates increase, that the price of assets, stock market, bonds, and all of that will begin to decline. So that's what we look at. And it's also good to contextualize your inflation rate with the rest of the world. If your inflation rate is running high, running really crazy, while the rest of the world inflation is moderating, then your relative and your sources of competitive advantage begin to erode. And that's very, very important. And the currency of a country where inflation is high can never appreciate against the currency of a country where inflation is low. Okay? And should not. I don't, in economics, you never say, don't use two words, never and always. So will Nigeria go to the Eurobond market? Yes, we can, yes, we will. Maybe not, but I know that a visit to the Eurobond market is inevitable. TSA is abolished. TSA means Treasury Single Account. Again, like all rules in Nigeria, rules are made to be broken. So I think it was the Federal Capital Territory that had permission to actually pull out of the TSA. Everyone's having that, so we'll see. Another thing that is a big elephant in the room is the minimum wage. Whether we like it or not, minimum wage has to be addressed, and adjustment. We're going to take a look at that briefly. But that drives a lot of things, because the assets that we have, the shares that we have in our portfolio, if each of them have to pay minimum wage, and so the analysis of that is. Another thing is that the level of bank recapitalization, which is going to be addressed, because if the banks have to increase their share capital and they issue more shares, the price of the share prices are likely to decline. Then the cost of living crisis manifests itself in different ways. One of it is shoplifting in the supermarkets. So you have the formal markets and you have the informal markets. There's no shoplifting in the informal markets. You can't go and shoplift in the market. You'll be lynched there and there. But you can shoplift in the shopping mall. Because all they can do is arrest you, take the goods back. But if you dare go and shoplift in the Harara market in Aba, you'll be visiting your creator very quickly. Looting of food warehouses, that's a carry forward for NSAS, looting, the border reopening. It's not that meaningful, because when they say the border is closed, it only means that you have to pay more to get across the border. But now that it's been reopened, then the premium of paying across, to bribing to cross the border, if at all you're doing that, has reduced. Social unrest, yes. People are hungry. People are angry. People are anxious, and some people are alarmed. That's the Niger Delta. The army officers were affected very late arrest. May their soul rest in peace. Now, key global trends that we need to watch. The world, like we say here, we are saying that it's not an election year; it's the election year, and we have elections. India, the largest democracy in the world, has election 19th of April, I think, and I think so. Modi is likely to win. South Africa, big problems there. Zuma is splitting ways with the African National Congress. The African National Congress is the key. It's a liberation movement which became a party, and once you control the party, you control. But the problem now is that the Zulus, who are the majority tribe, so if Ramaphosa is from the minority near Rhodesia, sorry, near Zimbabwe. I was brought up in colonial times, so I said Rhodesia. So South Africa is interesting, but I think that ANC carried the day. In Ghana, the party in power is like to lose, even though the economy is turning around. So it's time to move to Mahatma. In the United States, it's a toss-up, but we believe, we wish, and we believe that the old man Biden wins. A Trump victory will be quite traumatic for global geopolitics and economics. In the United Kingdom, it's almost clear that I don't know who wrote this, the Labour Party will win. Everybody knows that. So the Labour Party will win. The polls show them about 60% ahead. So artificial intelligence influencing political outcomes. It's also influencing the way business is done. And all you have to do is look at the share price of NVIDIA and see what has happened. But again, the political outcomes, the TikTok and what do you call it? TikTok and Facebook and Truth social media and X, what do you call it, Twitter. These guys have very profound influence on the subconscious of people. I think TikTok for the younger generation, Facebook for the other, Instagram. So we will see these things happening. So I think that on balance, generative AI is good for the world. Guardrails have to be there. There's nothing you can do. So just like virtual assets, artificial intelligence has actually made the world much more competitive, much more productive. One of the major variables that make any perfect market perfect is availability of information. But is it true that with artificial intelligence that information is not asymmetric? But it depends on who is controlling the channels, right? And really, people controlling the channels, then the information you are getting is not the actual information. It's loaded, right? And if the information available is so much, you'll be caught in what they call information overload or analysis paralysis, right? So normalization globally, we see normalization of monetary policy taking place. We are beginning to see that. Somebody came out today to say that, look, one of the Federal Reserve chairman of the Minnesota said he does not see any reason why they should even begin to bring down interest rates. Again, you will know that the guys in in the US, you're allowed to, you can join politics. Jerome Powell is a Republican, so you're allowed, even if you are in the money policy, even if you are in the judiciary, you can declare your political interests. So we'll see. But we believe that by June, we are going to begin to see latest easing of interest rates, easing of mortgage rates, reduction in the price of petrol, and people are going to feel the way it is. And Trump has his hands full with so many legal challenges. Will the climate conditions in the world improve? Yes, global warming is real. And if you're in Lagos and Victoria Island today, the humidity and temperature is almost unbearable. But again, those are things that, therefore, global investment flows with targeting the ESG type initiatives. We see private equity begin to slow down somewhat. So what are the growth projections? We do not think there'll be a recession. We think there'll be a soft landing, which we've already had. And the resilience of the US economy becomes very real. The US, in all fairness, 25 to 27% of global GDP is the US. They have less than 3% of the global population. Not only that, their currency is the dominant reserve currency. 75 to 78% of all trades in the world are settled in dollars. All the talk of de-dollarization is a waste of time because money must be a unit of account. Therefore, it's easier for me, rather than looking for somebody who wants a CD in Ghana and somebody wants a Naira, this mutual coincidence of wants doesn't work. So we have a unit of account which the Ghanaians will accept, which the Nigerians will accept. And that makes life easy. That's what the whole idea of money as a transactional asset. Okay. Now, so we expect the advanced economies, so you can see the global economy is going to be growing at about 3.1. The advanced economies are going to be growing at about 1.5, I think a bit higher. Emerging market and developing economies are about 4. The United States, 2.1, and that is huge. Latin America, the Caribbean, 1.9 this year. Euro area, 0.9. Look at the difference between the United States and Europe. Sub-Saharan Africa, 3.8, and Nigeria is going to be going slightly at about 3 with some luck. Middle East and Africa, Middle East and Central Asia, 2.9, 2024. Emerging and developing Asia, 5.2. Please look at that. The highest rate of growth is in emerging and developing Asia. That's very interesting. Okay, so for us, what's important is that China is getting out of the COVID era. They have similar plan, but there's a problem in China with the real estate thing, which is this crisis before in Dubai. We've had that usually a spillover of growth, excessive growth and cyclicality. US I've talked about, and the European Union, where our traditional, Nigeria's traditional businesses with United Kingdom and the European Union. And we're seeing European Union, it's still stagnated, but we think it begins to get better. So global commodity prices, wheat has fallen, but in Nigeria, flour price has not fallen, but we are seeing some ease in the gold. If there's an increase in the price of gold, then there's a drop in the value of the dollar. So, and a drop in the value of the dollar must not be confused with the appreciation of the naira. So there are times when there's naira appreciation, or there's times when there's dollar depreciation. If the dollar depreciates, you know what it means. It means that your proceeds from oil will be less in value. So, and the price of oil will increase to compensate you for that. Cocoa, we've said it already, is $10,000. The big game, but do not be deceived. The average is still going to be around 3,000 if you're lucky. So don't, don't ride the tide. Let the trend be your friend, right? Palm oil gone up 11%. Palm oil is good business, but mainly out of Indonesia and Malaysia, right? In Nigeria, the people that benefit from palm oil are typically in Delta State, in Rivers State, where you have Bismark, and to a large extent, Akwa Ibom State. And I think Cross River State, there's a lot of palm oil products. Palm oil, palm is one of the commodities that has to almost 100% utilization, from the leaves to make the thatch roofs, from the, what do you call it, the palm kernel, the casing itself is used for roads. It's end to end. So you have palm kernel oil. They use it to make creams. So I mean, but the only thing about it is that the palm plant can be very destructive on land. So, but you benefit from it all. Crude oil we talked about. I think it's 86 now, but averagely we're expecting about 75 for the year. Natural gas has plunged. Strangely enough, natural gas has plunged globally, but the price of natural gas in Nigeria has increased, and that is why you're having a power problem. Okay, so where are the tension points in the world? Africa has its own problem with coups. China and Taiwan were looking at one another, Ukraine and Russia. And I think those are the hotspots. Then Yemen, so Gaza and Israel, but below that is Yemen and the Red Sea. Okay. Sub-Saharan African outlook, of the world's 20 fastest growing economies, 12 are in Africa. But growth is not normally volume. A smaller economy is likely to grow faster than a big economy. Just the way I always try and say it is that if you have a child who is 1 year old, you feed that child with feeding bottle and all that, and that child will change his shoes twice in 1 year because the feet have grown, right? Well, the same amount of food you give to an 18-year-old, or 10 times that amount of food, and that child will grow only 1 inch, while that 1-year-old child will grow by 6 inches, right? So there's the rule of large numbers. And so a small economy is like a small child can grow 6%, quite small. And that child who is changing his shoes and shirt every time, when the mothers go and buy shoes for their children, they buy 2 sizes bigger so that the child will, because they don't want to spend money changing it. Say, I buy the shoes, the next minute, the child has outgrown it. So that is part of that process. So you use the same for countries. Now, fastest growing economies in the world, Macau, Guyana. Guyana is very close to the case. It is a basket case. Nigeria and Benin, 11%. Benin is next to us, we're at 6.3. I don't see Chad there, but okay. For the break, lost connection. Can you guys still hear me?
Yes, I can.
Okay, no problem. Let me share the document again. That's where we're. Okay, so like I said, this is So this is why we have 20% growing economies in the world, and we need to buy into those ads. Stop here. Okay, stop share. Okay, so but there's also debt distress. One is African countries are growing, but African countries are the preponderant countries that with debt distress. This morning I was listening to BBC and saw that this distress, there's likelihood, I think Zambia, I think even Ghana, a number of these countries are in distress or likely to go into distress. Nigeria is not there yet, but we are slowly working our way into that distress club. But I guess with the corrective measures, maybe there's a probability that we avoid and we dodge the bullet. So, but there's work to be done. Congo Republic, with all its resources, it's the most resourced country in the world, DRC, but it has more problems than any other country you can think about. Sierra Leone, we have some problems there. Ghana is okay. Ghana is beginning to work its way out gradually. South Africa, huge resources, but management problems. Angola is becoming a very interesting case. And Rwanda has always been one of the fastest growing. Again, one of the things you have to understand here is that growth is usually high in post-conflict economies. So if you, Ivory Coast had the civil war, and immediately after, Rwanda had the genocide. So if you look at post-conflict economies, they seem to do well because conflict destroys everything and then they come back with vengeance. So the impact of the global economic trends on financial markets, one, increased demand for loans and for refinancing, cross-border transactions, so trade flows will increase. We've seen global tourism grow from 1.2 trillion to over $2 trillion in 1 year, what we call revenge tourism, revenge travel. Remittances and flows of money will increase, and the world is getting much more efficient. Strangely enough, the one thing that you must understand is that the income inequality is getting worse. In other words, the top 18 billionaires, dollar billionaires, have more money than almost 50% of the global population. So these 18 guys have more money than the global population is going to be about 8 billion. So let us say these 18 guys have more money than 4 billion people. And if I increase that 18 to around 25 or 30, they have more money than 6 billion people. So you can imagine how they say, the Bible says, unto him who has more shall be given, and unto him who has none, even a little he has, shall be taken away. So they say, right? So what are we seeing trends recently? People are going for sustainable investing. We're talking about biotech. We're talking about digital assets, alternative assets. We're talking about mergers and acquisition. We're talking about artificial intelligence and using nostalgia, going back to the future, going back to the past. We're seeing momentum trading. We're seeing adaptive reuse in real estate and what they call there's adaptive reuse and mixed use. So you go into a building, you have offices, you have hotel, you have residential, and there's one on Femi Pierce where the Capital Club is. You have all, so we call those mixed use apartments or buildings. There's one by Eco Hotel roundabout there, which is mixed use, right? So one, there's adaptive reuse, which is refurbishing buildings and making it better. There's mixed use where you have, so you're living in an apartment. There are supermarkets in the apartment. There's a hospital in the apartment. There's a hotel in the apartment building. And so you work in the same building, do your shopping, do your laundry and everything. What is the effect of that? It means that you're probably going to be a very fat person because since you're not moving anywhere, you're doing everything, right? And your health is likely to suffer. So you need the hospital in that building to take care of yourself. So what are the markets saying? The markets, I see, and I checked it out, are saying that the markets are saying that there's a lot of value in AI. There's a lot of value in crypto assets. There's a lot of value, but there's also the market is punishing people. There's this antitrust mentality. So Apple and Google are being punished because they say the Apple Play app, the iPhone does not allow you to disable some apps. Once you go onto the app, you can't. They say that way they are minimizing the ability of you to have options, right? Because of course you have iTunes, you have your Play Store, what you call it, Play Store, right? So once you go into Play Store and you try to leave, an app, your ability to, what do you call it, where you to disable the app or delete it. Uninstall. Okay, the uninstall option. The uninstall option is not easy. All right. So you are stuck with it. So I think that is what the Department of Justice is fighting Apple for. And they slapped them a fine of about $1.9 billion already in Europe and more for stifling. You all remember what happened between Netscape and Microsoft, Netscape Navigator. But in the end, Netscape itself died, and Microsoft was dismembered into different groups. But I don't think that's going to happen to Apple right now. I don't think that's what's going to happen to TikTok. Some people put together a pool to buy TikTok. TikTok is very, very popular. So the investment outlook is for looking at trends where people's use of those things, and basically competition, consolidation, and actually aspiration. Okay, so for this second quarter, we'll be looking out for elections, looking out for the price of oil stabilizing, looking out for a few things happening in Ukraine, and looking out for what's going to happen in Gaza. I think that in Gaza, Netanyahu is playing his last card, and he should be out of there very soon. Gantz, the Minister of Defense, is getting ready to take over. But again, it's easier to put 50 flies in a matchbox than to get the Israelis to agree on anything. So we are looking at Japan. Japan is very, very interesting. They're coming back. So Japanese assets can be very, very well. Two sides. One is that the people that sell arms, those companies like in the US, they have a military thing. The shares of those companies will increase, but also we are concerned, but we are looking at what's happening to Boeing. Boeing has been unlucky, and lucky that there are two crashes with the 737 MAX, and that about 11 different incidents, which have brought. Now the chief executive of Boeing has stepped down and a few others, but there are only three major manufacturers of aircraft in the world. There's Airbus. Boeing is number one. Airbus, and then Embraer in Brazil, and Bombardier in Canada. Those are so for private jets and regional jets, Bombardier and Embraer dominate. Airbus is a French, German, Toulouse. So Airbus is really making a lot of impact. But what is interesting though is that aircraft movement. Atlanta is the busiest airport in the world, has about 1,551 landings in a day. That is essentially for every minute of the day, a plane is taking off or landing. Every 60 seconds. In Atlanta, 9 runways, right? So I want to looking for investment opportunities. Aviation, manufacture of aircraft, airports, hospitality, and airlines become a major area. I just want you to imagine that in a day in Atlanta, 459,381 passengers go through Atlanta Airport in one day. 459,000. I want you to imagine 459,000 people in one location. You know, I want to imagine polling booth 20 people are going to go to the PVC and they have 10,000. Imagine 459,000 people going through one airport in one day. So that tells you everything that is happening there. Okay, so I'm taking this because the opportunities that we need to invest in. And when you come to Nigeria, for example, the moment airpeace started going to Gatwick, then you started seeing discount fares among the, and I was looking at Lagos Airport movement in the last 24 hours. In a day, we have something now like almost 600 flights in a day out of Lagos. There are 3 terminals in Lagos: the international, the MM2, and the general aviation, the MM1. MM1, MM2, and then international. We have 2 runways. One runway is not effective because it's like, as usual, Nigerians stole the runway lights. So we have to replace them. US equities market is a market that I know very well, and a lot is happening. A lot of things are happening. Last year, the market gained almost 25, 26%. So you can imagine this year it's been rough, but very interesting things are happening. We have what they call the Magnificent Seven: Amazon, Alphabet, Apple, Nvidia, and Tesla. Tesla take with a pinch of salt. And so we are seeing, and the world's richest man has come back again. Last year it was Ben Arnold, the chief executive of Louis Vuitton. Now Jeff Bezos is back, the chief executive of Amazon is back, even though he had paid $30 billion as part of his divorce with a woman. So what did I read again yesterday? The estranged wife of the founder of Google is now the running mate to Kennedy. She's trying to become a vice president. She has more money than things to do. Investors are expected to be very cautious, but again, remember Warren Buffett said, rule number 1, do not lose money. Rule number 2, do not forget rule number 1. We buy on the rumor and sell on the news. So Fed is going to start cutting. As they cut, so the value of shares are going to increase. The dollar will then a bit shaky in that case. So there's money to be made in the US equity market, but not only the US, but markets generally, equity markets generally. So these are the strength of the Magnificent Seven I told you about. So look at Google. The share price year to date about 5.6%, the revenue up 18%. I remember when Google started, people didn't know what it is. This company did not exist 30, 40 years ago. Amazon did not even exist. Now its share price up 17%. Apple, share price down. Apple, again, we think that Apple, and they're going to do a share buyback. Apple has cash in bank of about $400 billion, just cash sitting down in the bank. So I want you to imagine $400 billion is the exact, almost the same amount of Nigeria's GDP. One company with less than 100,000 employees has that in cash, right? Their revenue is $119 billion, but much more than that. And their profit after tax up 13%. But what do? They have the iPhone, they have the iPad, they have the Apple Macintosh. Now they're trying to go into electric vehicles. So, and their services, their iWatch, they have ITV as well. So they make money by going to bed, actually. They control the smartphone market. Remember when they came in, Nokia used to be the king of that market and everything. But now they have there's some competition or the Chinese. Okay, Samsung but Samsung is Korean. So, but again, an iPhone is an iPhone. So that's the ultimate. Share price of Meta, which is Facebook, revenue up 16% and the share price up 43%. Microsoft hired the guy the founder of the guy with artificial intelligence. Yeah, so again, Microsoft offered to buy Google at the early days for $10 billion, and they told him to get out of there. If they had accepted it, they wouldn't be where they are now. So NVIDIA up 92%. I advise, again, don't take me seriously because I'm an old man. So NVIDIA, I decided not to buy Google at first, but after I'd gone, I came in late. So because I didn't believe that Google was going to go anywhere, but I was totally wrong. And I had to go back and share in the spoils. NVIDIA 92%. It's they say they have no rivals. They're the best in this space for generative AI. Tesla is one that, if you look at the P of Tesla, I don't think it's infinity. Tesla electric vehicles, and the guy, Elon Musk, went to buy Twitter because there is trying to go to the moon as well. I just think that is an accident waiting to happen. US fixed income market, the yields are down to 4 and they will go lower. But we think that post-election, the United States is going to be a different thing. But I can almost assure you that the US national interest will almost make it impossible for Donald to become president again. Fixed income market, inverted yield curve. But when you look at asset classes, I want us to understand, look at gold. Q1, 5.3%, S&P 9.4%, the Nigerian stock market 39%, but I think that market is headed for a major correction. Nigerian 365 days, 3-day treasury bills at 21%. Bitcoin, which I fear and I dislike, it's up 69%. Warren Buffett said Bitcoin is rat poison. So for our indicators show before we are almost all red. Now we have 3 reds and 4 greens and 1 amber, I think. So the exchange rate has appreciated. That is green actually. Trade balance is positive. Money supply growth is supposedly declining, and this is 2023, 24, but not yet. Oil price doing good. External reserves, if you believe them, they're doing good. Oil production down, but it's at 1.4, which is better than this time last year. Inflation at 30, in fact 31.7, so this is wrong. And also growth. So generally speaking, not bad. So we think the Nigerian economy will grow, even though tepid. Inflation will remain high, it will ease off, but then the minimum wage will jolt it in the wrong direction. But after that, we'll absorb that. The Naira is appreciating, but we think it's getting to a level where it cannot appreciate much further. And it will stay there until supply and other things come. So if you have the dollar, buy it. But if you don't buy it, just don't worry. Your Naira will be working for you. Look at fixed income securities in Nigeria. Look at treasury bills. Look at bonds. Look at corporate bonds. Look at bank deposits. All of a sudden, we are now beginning to see return on financial assets outstripping return on physical assets. There's a reform mode in Nigeria, but you see, I don't know that vested interest in Nigeria is far much higher and stronger than national interest. And the vested interests have Nigeria and strangulating Nigeria. And the vested interest that gets political power, and the national interest is the victim of this vested interest parasite structure. I think sooner or later, Nigeria realize that it's going to be continue to be stored because Turkeys do not vote for Christmas. Recent issues, like we said all along, we already talked about the trends, fiscal, monetary, trade, investment. We already talked about that. In terms of, you know that the Central Bank met the NPC and it was very clear what they want to do. They want to focus on price stability. They want to focus on liberalizing this exchange rate market. They don't want to be distracted, going into anchor borrowers and all the other things. I think that the autonomy and independence of the central bank has to be established right now. It doesn't look like it's totally autonomous and independent, but it's 10 times better than what it was before under the previous dispensation. So the team, the central bank, are doing a better job than the team that was there earlier. Now, how do you judge them? You judge them by inflation, you judge them by alignment of the exchange rate, you judge them by bank system stability, and you judge them about the confidence that people have in the domestic currency. Okay. Like we said, and I just want to kind of wrap up around here. So we have, I think for this audience, you have to look at inflation. Inflation is the real issue, and how much of this, and look at the trend of inflation more than just inflation itself. You can see that it is increasing, but at a slower pace, and that monthly inflation is beginning to slow, because monthly inflation is much more reliable as a current indicator than annual inflation. Also, core inflation, and I think a few things will happen, like the price of diesel, which is a major point out today. In fact, yesterday I saw a lot of queues because of the rumor that price of petrol is going to go down and that the independent marketers will not have access. So all of a sudden, the queues all about. In fact, in front of Federal Palace, it was a complete disaster. So again, distortions. How much of price increase is because of distortions and shocks, and how much of price increase is due to natural cost increases? I think those are the things that are here. I think that price increase also can be a function of the amount of liquidity and function of the amount of income available to spend. People have adjusted, and when you adjust mentally, switch from one product to a substitute, it's very difficult to come back at times, because all of a sudden you begin to have your marginal utility of that new product begins to equate the utility you got from the previous one. So that's where we see things happening. Key stopping factors I've talked about: exchange rate, money supply, diesel, and policy tightening and moderate inflation. We know that. Monetary conditions are tightening of monetary policy, and that is driving things. So liquidity crunch, there is liquidity crunch in Naira. You consider the number of people, the number of banks borrowing from the central bank have increased. Almost everybody was borrowing from the central bank, and that was not fair. That was not right, and so they're trying to correct that. So tightening has also helped to bring in portfolio flows. We've seen almost 2.3 billion, even about 3-something billion dollars coming in the last couple of days, and that but that's hot money. And a lot of people doing the carry trade, what we call the carry trade. So other important things, getting the oil production under control, clearing the backlog of FX, sanitizing the market, making sure that speculators, I don't believe in that. I believe that speculators are a product of a distorted market, and if you change the distortion, there will be no speculation. And there'll be speculators anyway, but speculators make money. But I tell you what, speculators lose a lot of money. Okay, so now next 1 to 4 months, we will we'll go to the World Bank meetings, 10 to 15 of April in Washington. We will attend the ADB meetings in May. The president will make a statement, I think, at the end of May, I think. Should be also a difficult journey. And the most important element in this is we being credible and being truthful to ourselves as a country. There's too much dishonesty in the public space. So interest rates remain high, and they will start to decline later in the year. And the immediate impact of interest rates is that your savings will increase, your money prepared to consume will reduce, and whether those savings, institutional funds will find, retail and institutional funds will find their way out as loanable funds. Because savings is one thing, but loanable funds is another, right? And you have to understand that. But savings, economists tell you that savings equal investment, but not in all times, right? So there's planned saving and planned investment, and that's a theory I fail to understand up to now. But I keep it simple. Saving, what is saved is what is invested, depending on how much of intermediation takes place. So long-term impact, households will have more money, hopefully, because of minimum wage. Households may have more money because of interest, but that the government money spending on interest will also challenge government things. Immediate impact, so we've gone through that already. So the trade-off, because of high interest rates, corporate mortality will increase, layoffs will increase, growth will slow initially, but you will avoid a recession. Second level impact is that you have inflation declines, aggregate demand increases, currency stabilizes, and then activity things. So inflation may require more than tightening, yes, but it's just part of the whole process. So we talked about minimum wage. We're not going to waste time on that. Will minimum wage be inflationary? Yes, it will be, especially based on 3 variables. 1, how much are you going to increase by? 2, the effective date of the inflation, whether the arrears are going to be paid. And 3, whether an increase in inflation will lead, increase in wage will lead to productivity, which will not. Those are the things that we're going to be looking at. There's real and nominal wage, and all those are theoretical factors. Taxes, yes, there'll be more efficient use of taxes. Subsidies will be reduced over time, and Nigeria's debt service will actually become a problem. Now, the whole idea of revenue, Nigeria focused on revenue and not growth. Now, all those two have to come back together. And in the end, for trade, Nigeria's one of the biggest sectors of the economy is trade. Every Nigerian is a trader, one way or the other. So total imports and total exports. Our trade deficit is what you are saying. Usually is expressed in dollar terms, but this is 1.14 trillion. So assuming that 1,000 naira equals $1. So what do we see? Exports growing in 2024, imports declining in 2020. These are our top trading partners: China, India, USA, and EU. I've talked about in the past. All those economies are doing well. Leading import source: Singapore, China, Belgium, India, United States of America. And so we've seen, I talked about border reopening again. Stock market performance, you have to be careful here. I think the market is about to correct itself sharply. So it's gained 39.5% in Q1. But I can tell you, the number of days when number of days of losses of negative trades has increased in the last 1 month. The foreign portfolio investors are coming in. We think that this is an issue, but the earnings, if you take out some of the big stocks, the Nigerian stock market has already been in negative territory for some time. Take out BUA, Dangote, MTN, and others. Find that the rest of them are actually. So what are the characteristics of the market? The market is illiquid, it's shallow, it does not reflect earnings. Thirdly, it's being manipulated by those who have their own interest and the speculators. So this is what you see. You also have forex losses because of exchange rate, and those exchange rate transactions for the last quarter were done at 907 naira to a dollar. So even if when they now report Q1 is ending tomorrow, today is the last trading day of Q1. What do I think will happen? When if they were to make adjustments even at 1,200 naira to a dollar, it means that there's at least another 300 naira, right? So at least a 30% hit coming up. But the beauty here is that let us assume that naira now appreciates further. So in Q2, you are going to be seeing foreign exchange gains in those books as against what is happening right now. Okay. So what are we seeing here? MTN, these are the guys who declared forex losses. But the inland revenue is saying that some of those losses have been exaggerated, and therefore they're taking another look. So this stock price show you we are now going to see Nigerian breweries down 22%, Lafarge up 17%, Wow up 47%, and Dangote sugar down. So that relationship between stock prices and earnings of top listed company we have seen, we are now beginning to see some change. And all I can tell you is that this quarter, prepare yourself for a major correction in the Nigerian stock market. Okay, so these are pension funds of their assets. So stock market, there's still some value there, but please be very cautious about how you're going to do it. So again, political expediency or economic consideration. Again, in today's environment, economic consideration comes next after political expediency, and then there are politicians. So, like I said, spring meetings, ADB meeting, minimum wage, 1-year anniversary, supplementary budget even before then. So, so we are going to be having all of these things about developing a strategy for Nigeria. But we know what to do. Nigeria knows what to do, and the Nigerian people know when they're being shortchanged. So we need to come to terms with the reality. We are beginning to tinker around it, but we're not there yet. So are there risks? There are political risks, there are policy risks, there are social risks, and there are all sorts of things. There's a risk of total disorderly breakdown. There's a risk that what we planned will not come through because oil prices have gone away from us. So, of course, data integrity risk I mentioned as well. So what we are told, what we feel, and what we see, there are three things: what you see, what you hear, and what you feel. Okay. I always tell my colleagues here that in Wari we say that nobody tells the blind man when it's raining. Okay. So that's where we are. Nobody tells the blind man when it's raining, and nobody tells the deaf man that the market is closing. So I've already talked about it again. We're just repeating ourselves about inflation rises slowly and all of that, but we talked about those things. So for growth, and these are the various exchange rates projections that we are seeing at this point: 2,000 naira to a dollar, 2,000 naira to a dollar AIU. Goldman Sachs says 1.2, 1,200, and some of us are saying it will be lower. So the naira will appreciate, but be careful, it's not going to appreciate as fast as you think. As a matter of fact, it will depreciate a little bit when people run out of things. Okay. So in conclusion, sir, Central Bank will remain aggressive in mopping up liquidity. Interest rates will rise, but not much more. I think that we're done with the 600 for now. There'll be no increase in May, and in July maybe we'll have another increase. But that's right. Foreign portfolio investors will come in. I think that Nigeria is going to go to the market for Eurobond refinance, and also we'll go to the market to attract for special Nigeria bonds to attract Nigerian investors. So Naira rate 1,300, probably crossed a little bit, 1,280 or something like that. Investor confidence will begin to improve, and things can only get better, but very, very slowly. And there'll be hiccups along the way. But remember, the stock market will correct itself. There'll still be some political misunderstandings in Nigeria, which will lead to political violence as well. Within the markets, slowly but surely, some money begins to come in, but Nigeria has to go and meet with its creditors to refinance its existing debt so it can avoid distress. Thank you very much.
Thank you so much, sir. Always an enlightening session listening to you put all of this together. There's some curiosity as to the positives we're seeing in the exchange rate, and the curiosity comes from the fact that our crude oil exports didn't increase. If anything, it fell. So what is informing this improvement in the exchange rate that we see, and how do you tie that to, there's a question here, people who have said that, oh, Nigeria should sell crude in Naira. How feasible is that?
That's wishful thinking. Nobody will sell crude in Naira. Look, like I said, the dollar is a unit of account. Sell crude in dollars, buy crude in dollars. Our oil revenue dropped because of one thing. We already sold forward oil. You see, when we went to the ADB and did that deal, supposed deal, we committed 90,000 barrels a day forward. With the Chinese, we committed, so every day, right? My late uncle used to tell me that it is little by little that the rich man becomes a poor man. The rich man doesn't become a poor man. Oh, it's only chicken. Oh, it's only, before you know it, you are going bankrupt. So I think let's not deceive ourselves. The path to it, and we will pay for it. And it means at the end of the day, we have to be more productive. And, I think that what happened in Okwama was a point out the fact that we have more problems than we think. The amphibious battalion cannot be attacked and killed and all of that and devoured and all of that. If there must be something more to that thing that happened that we know. So we'll see how it goes.
All right,
There's
thank
a
you.
lot of work to be done.
All right, there's two questions on currencies here. What do you think about the BRICS currency and its impact on the economy? And also the plans for West African Monetary Union unit of account, unified currency, in terms of facilitating trade within the region?
Well, I think that one that the de-dollarization of the world is not going to go anywhere. The dollar is iconic and it's a preeminent currency in the world. So it may change one or two things, but it's not going to change that much. I believe in regional integration. I believe that the bigger the region, the bigger the market, and the more it is for the bigger economies there. So I think that the West African region will, we already have access because we have the largest refinery there. We are doing the east-west road, which will also go all the way to Ivory Coast. We have massive airport and aviation facilities. In Lome Airport is wonderful. Accra Airport is super. Ivory Coast Airport is also wonderful. And I think Lagos is trying to catch up. Abuja Airport. So, like I said, regional integration means bigger market. Bigger market means economies of scale for producers. Economies of scale for producers means that you have to distribute your products. So you need the infrastructure to do it. Rail, road, and marine infrastructure. So from a macroeconomic perspective, really, tired of saying potential. Nigeria on the potential path for the past 100 years and never got to reality. It's now time to take one or two things and come to reality. How do we get that? A lot of work to be done. A lot of work to be done. And the work can only be done by those who have the skill and the capacity to do it. Do we have the skill and capacity? Yes, we have it, but people that have the skill are not. Those that have heads have no caps, and those who have caps have no heads. So it's part of it. Part of that whole thinking. So we need to swap them so that the people with heads can have caps, and the people with caps can have heads. That's all.
Okay, let's move on to the next question. Towards the end of last year, the US Fed rate cuts was expected to start in the first half of the year, but we've not seen any rate cuts at the end of the first quarter. What are your thoughts or expectations regarding the timing of the rate cuts?
Well, you see, the central bank in the US is very independent, and they are looking at they begin to differentiate between transient and structural inflation factors. What is more important, you see, the job report shows that the economy and growth report shows that the economy is strong. And if you do not, if you go and create cut rates precipitously, you may bring back inflation with a vengeance. So it's a fine-tuning act. The US has done a lot of work, and of course they have the best economists in the world. So if any set of people understand economics, that's where they are. Beside that, so I think that, like I said earlier on, we do not see a rate cut until June, and some of them are saying that we're going to have 3 rate cuts this year. So if you have it in June, another one in August, and don't forget, Labor Day is the first Monday in September. It is the poll that you take on Labor Day that tells you who is going to go into the White House in November. So everything in America is driven politically. So I think that you will see it in June. I think the cuts will be 25 basis points, another 25. And once mortgage rates start coming down, you will see that Biden's poll numbers begin to look better because he's, even though he looks frail, he's a smart aleck. So he's a wise man. He's a wise old man.
Thank you. All right. Now, in terms of, we've seen a lot of actions from the CBN in terms of monetary policy, but it always seems like there's a disconnect with fiscal policy. So in terms of aligning monetary and fiscal policy in Nigeria in ensuring that, there's further improvements in the economy, strengthening of the Naira, when do you, when are we going to see that alignment between monetary and fiscal policy?
No, coordination does not mean alignment. And I don't think, if not the central bank, at one time Nigeria tried to make the central bank to report to the Minister of Finance under Ani and Obacha. I think that there's coordination. I do not think there is total alignment, because there's a trade-off. That's what we call a trade-off. Trade-off, because you know that when you have indifference curve analysis, you have product A and product B. If you take more of product A, you have to take less of product B. And that's why you have your budget constraint there. So in the policy mix, there are things that you trade off by taking A. So the trade-off and sequencing are two different things. The fact that I'm delaying this policy program now because I do not think it is fit yet, right? And then does not mean that I've given it up. But people are looking at it all together. There are times when they take you to emergency room and say, we know we want to remove this appendix, but we cannot. If the guy's blood pressure is higher than normal, his blood count is, so we have to stabilize him before we can take him in for the appendix surgery. So do not confuse the fact that some things are being sequenced to happen before the other for lack of coordination. Is there room for better coordination? Definitely yes. But again, let's know that there's some sequencing issues, and that the economic recovery is a slow process. It's a slow process, and again, there'll be setbacks. Let me not deceive you. If I hear tomorrow that the Nigerian Naira has gone from 1320 to 1400, I will not be surprised. But I don't think it's going to happen. I think that it's a slow, steady process. But it's the hardship associated with all of these policy changes, right? Coupled with the poor management skills of Nigerian public sector is taking a toll on the Nigerian people. And you can see it in their anxiety, their lack of enthusiasm, and more than anything else, they are virtually in a state of alarm.
Thank you. Thank you so much. And this is just by way of clarification. Somebody just wanted to know, in your slide, the indicator used to measure the most indebted countries, was it debt to GDP ratio? The person is just asking for clarification.
Yes, that's what it is.
Okay.
That is GDP, not absolute debt.
Okay.
So,
okay. I think that will be all the questions we can take for today. It's already 10 minutes to 11. Yes. So 10 minutes to 12. Unfortunately, George is not here, but I'd just like to say, as usual, a huge thank you to you. It is always an amazing session listening to you. Yes.
George is on the line. Yes.
Oh, is George here?
Yeah, I'm here now.
Oh, George, okay, all right, go ahead.
Thank you very much, Doyin. Thank you, everyone, for the success of today. We are grateful to God for this. This could not have been without the sustained interest of our participants. The number has been very overwhelming, increasing by every passing edition. And the torrents of questions here attest to the interest we have for this program. We are grateful for this. And on this, we say thank you so much. To our chief host, Mr. Adebraimon, your sustained and relentless effort to keep this program going is well appreciated. We know what you do for humanity, all the effort you threw into this to ensure that every quarter we are able to have this webinar is well appreciated on this program. Thank you so much, sir. We are grateful to you. And then to our able speaker, who is always spot on at every edition that he comes on. It's been a revealing section. It's been an enlightening section and good knowledge sharing. Thank you for giving us access into your prodigious knowledge, your profound asset, fountain of knowledge, for us to share on how to handle our economic affairs and what we need to do as we go into the next quarter. There's ray of hope, and the horizon is looking bright, given the data thrown up today. We thank you so much, sir, and for all that you do for all of us. God be with you, and God bless you. For everyone, we look forward to seeing you in our next edition. As always, by the grace of God, we will have it, and it's going to come better by each passing edition. Thank you so much for being with us today. We look forward to seeing you, and God bless you.
Amen.
Thank you so much, sir.
Thank you, sir.